Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, finally FOMC CPI is over, and sadly we did not get the correction retracement we were waiting for. But DXY, Euro USD, GBP USD, those pairs charts showed extreme moves, but sadly we did not get to see that kind of move on gold. Gold came to 2320 and bounced back, and if you look at the present trend of gold, then we can see a sideways market. Overall trend is extremely bullish, there is no doubt about it, but at present we can see a sideways market. But if you look at the charts of Euro USD, GBP USD, you can see a complete transition. Okay, so things were a little difficult yesterday. Anyways, okay, let's look at the market sentiment first. Okay, the numbers were hot, CPI numbers were extremely hot. Okay, so gold flat as sticky US inflation tempers hopes for early rate cut. US stocks tumble, yields jump as hot CPI dashes rate cut hopes. See, US stocks drop and the benchmark 10-year yield hits its highest level since November after the US consumer price index rose more than expected in March. Probably you also saw that market met all the expectations. That make it less likely that the Federal Reserve will kick off a rate cutting cycle in June. Market was expecting rate cuts in the month of June, but numbers came hot, so the there's a high chance that Fed will not be going for rate cuts in June, and traders are now pricing in a roughly 50-50 probability of rate cuts starting in July. Okay, so overall the fundamentals are positive for DXY US dollar, so that's why you could see the pressure on Euro USD, GBP USD and others. But we are used to see the correlation with gold, but at present the correlation between DXY and gold is not going well. So if you're used to trading gold comparing the chart of DXY, then do not do this right now, because gold have internal factors that are pushing gold towards the upside. For example, the geopolitical tension in the Middle East, the central banks buying gold all around the world are pushing gold towards the upside. So keep aside the chart of DXY for the next few days. Right now they are not having a good relation right now. Okay, but still, as a forex trader, it is important for us to know what is going on US dollar. So let's discuss about DXY for a few seconds. So DXY formed this big candle, massive candle yesterday. It broke the level of 105, made a high of 105.30, and we can see that market is retracing. These three small candles doesn't signify a trend reversal. Retracement is very much essential for any market, any chart, so we can consider this to be a retracement. So we can expect that after retracing for a while, market will try to bounce back again. DXY is right now standing at the previous resistance, so the previous resistance may work as support and DXY may bounce from here. And if it continues the retracement, then the next levels will be 104.95 and 104.75. From these two levels, you can definitely expect DXY to bounce back. So plan your trades accordingly, except gold. Okay. And this is the chart of gold. But my dear friends, you also need to look at the economic calendar. Today we have a news coming up, initial jobless claims data. Not a big event like NFP CPI, but still it will bring some volatility. So be careful at the time of news. Okay, now let's look at the trading opportunities. Overall the market is bullish, no doubt, but the present trend is sideways market means number of buyers and sellers are almost equal. It doesn't matter whether you trade on gold, Euro USD, stocks, commodities, doesn't matter. Always keep in mind sideways market means number of buyers and sellers are almost equal. So whenever you see a sideways market, always set in your mind that you have the highest number of buyers and sellers around the support and resistance. People mostly lose money in sideways market because they lose patience, enter on the middle of the chart, and end up losing money. So if you really want to make money on sideways market, buy at support, sell at resistance is the only trading strategy that will be helping you. Okay, so in this case we have 2300 to 2305 as the first support. We have been discussing about this. We have seen that 230005 is a FIBO level as well as it's a round number psychological level. So in case market drops, this level will definitely provide some support to the market. If market takes support and bounces, we can definitely hit the buy button. But the problem is that this level is far away, so we need to look at immediate levels. So we have another level around 23152 to 2312. The blue box, the thin blue box that I have drawn here, is another level where you can look for some support around the market. Let me show you why. Okay, the blue box we have derived from here. Yeah, see, when we are drawing FIBO here, you can see we have FIBO 23.6% retracement level around the area. So when the news will not be dominating the market, especially during the European session, Asian session, we can definitely expect the market to bounce around 2312 area. So these are the two levels, okay, that seem to be reliable as of now, considering the present nature of the market. And if market takes support, we can definitely hit the buy button. But you must be thinking that 2-3 market is trending around 2343, 2345, and Avilash, you're talking about levels of 2315. The problem is that, okay, the problem is that if we move to a smaller time frame, lower time frame, okay, lower time frame, we can see that we do not have a proper trend present. And if we consider this to be a sideways market also, okay, we do not have good levels here as well. So as a result, okay, so the number of trading opportunities are not very high, okay, and as I said, okay, people mostly lose money in the sideways market because we end up losing our patience. We think that, oh, I need to trade. We are traders. We don't need to be in trade all the time, okay. We need to trade when the market opportunity is right. So as per my analysis, my understanding of the market, these are the two levels, because on lower time frame or as well as on higher time frame, we do not see any immediate trading opportunities. If market comes around this level 2320 and bounces, you can look for a buy if market takes support, okay. But the level where market bounced yesterday, okay, but for that, okay, the volume needs to be very less. So keep your eyes around these two levels, okay. And during the day, especially during the European session, Asian session, okay, we also have a resistance around 2355, okay, 2355 to 2350. The red box that I have drawn here, the red box is little risky, okay, but still many of you are experienced traders. If you have the risk appetite, if you can do proper risk management, then you can also look for a quick sell around this area. But at the time of news, do not look for a sell because this may fail. Keep in mind, all the charts around the world have many levels, but not all levels have the equal strength. Some are good, some are bad. So this is a medium level, okay, that may work when the market is not being influenced by news, okay. So during the before the US session, if market reverses from this area, as a day trader, scalper, you can also look for a sell, okay. And the overall trend of the market is bullish, so it is better and safer to be on the buy side only. That we have been discussing for a long time. So these are the two resistances right now. The high made by the market, that is 2365 yesterday, and this one 2355 to 50. But keep in mind, these are resistances. That doesn't mean that market will have to reverse. They are not very strong. We have seen almost every day, we see the market is breaking the previous high and going up. So that's why we have been looking for buy resistance, sorry, buy breakout. So today also buy breakout strategy is still very much valid. So if market breaks 2365 by the US session with volume, then we can look for a buy as well. But before the US session, the volume is less. For a breakout, volume is extremely important. So if market reverses before US session, we can look for a sell as well. Keep in mind, the session will be very important because session signifies volume. So let me wrap it up. So we have a good buy around this area, being around number 2300, 2305. Then we also have a buy around this area if market drops during the day, 2315 to 2312. And if you want to go for a buy around yesterday's low of 2320, that's your personal choice, okay. I'm not very confident, okay. On the other hand, if market goes up from here, then we have the first resistance around 2355 to 2350. But in this market condition, taking a sell can be a little bit risky because overall the market is very bullish. The trend of the market is bullish. So before the US session, okay, if market reverses, we can look for a sell. That's it. Same story is applicable for 2365 as well. The yesterday's high. But when the US session will come, or before US session also, if market surprises us with volume, then avoid sell, look for buy only. Buy at breakout. If market breaks 2365, you can look for buy at breakout. But as we have been discussing almost every day, that buying and breakout is a little bit riskier, so follow proper risk management. Okay, so these are the trading opportunities that I see on the chart of gold right now. And swing traders, position traders, hope you made good money when the market was in strong uptrend. But day traders, okay, you need to be a little bit careful, because once you switch to a lower time frame, you can clearly see that we do not have a particular trend present. Okay, so same chart, okay, but the perspective varies from time frame to time frame. Anyways, that's all from my side, my dear friends. Thank you so much. Be careful at the time of news, and thanks for watching my videos. Thanks for giving so much love to my videos. Thank you so much. And yeah, press the like button.